Bitcoin trend analysis, January 23rd, 2026, Friday. The great storm that plunged the market into a deep and prolonged decline has finally passed, and exhausted silence has fallen over the battlefield. After days of brutal selling and failed recovery attempts, the market is now coiling with immense potential energy, preparing for its next major, violent move. This is a quiet before the next war begins, a war that will likely define the trend for the remainder of the month. Looking back, the start of January has been a brutal landscape of failed trends and vicious chop. This is perfectly captured by the predictive indicator above the price, which has painted a series of violent V-shaped reversals. Brief and hopeful blue ascents, marked by long signals, have been systematically and repeatedly crushed by sharp yellow descents and quick, close signals. Now, as the week comes to a close, another fragile long signal has appeared, but it is a weak and unconfirmed sign in a market that has repeatedly punished early buyers. Today, Friday, January 23rd, the session is defined by this extreme compression. The price is locked in a razor-thin range, fused directly to the white moving average around the 89,500 level. It is being squeezed tightly between the upper red and lower green Bollinger Bands, a classic sign of immense energy being built up before an explosive price expansion. The liquidation heat map provides a chillingly clear picture of this war. The price is not just in a range. It is trapped inside a massive, bright yellow band of liquidity that stretches between 89,000 and 90,600. This is a major high-volume node, a true battleground fortress that must be decisively broken for a new trend to begin. The next major upside target, a cluster of short liquidations, sits near 91,900, while the next major pool of long liquidations waits below 88,000. The volume speaks with profound silence. The massive purple spikes that defined the recent conflict have vanished, replaced by a pre-weekend whisper so quiet it confirms that both armies are waiting for a catalyst to initiate the next major battle. The best trading strategy in this environment is one of extreme patience. Trading inside this high-liquidity fortress is a low-probability gamble. The highest probability play is to wait for a confirmed, high-volume breakout that escapes this zone. The probability of a sustained trend emerging from this exact spot is low, but the probability of a violent breakout is exceptionally high. The multiple failed rallies give a slight edge to the bears, but the market is in a state of pure neutrality, waiting for a definitive move, conditioned for continuation. For a new bull trend to be born, the bulls must force a decisive, high-volume breakout above the liquidity fortress, specifically shattering the 90,600 ceiling. This would validate the new blue signal, confirm the reversal, and likely trigger a swift and significant percentage rally towards the 91,900 level and beyond, conditioned for reversal. If this bottoming attempt fails and the price breaks down below the liquidity floor at 89,000 on a surge of selling volume, it would invalidate the nascent bullish signal. This would indicate that the recent stability was merely a pause for sellers to reload, and a larger downtrend that has defined January is likely to resume with another punishing leg down toward the 88,000 support. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.